Welcome to the deep dive. Today, we're really pulling back the curtain on the fundamental infrastructure of digital commerce.
The plumbing.
Exactly, the plumbing. We are diving deep into two terms that you hear constantly in fintech, but, they're rarely understood correctly: payment gateways and payment processors.
Right. And while they're a pair, they're a critical tandem, they handle very different things.
And they manage very different kinds of risk.
That is the essential distinction. I mean, they're often bundled together, especially in the U.S. market, but understanding their separate roles is foundational for anyone in the digital economy.
So the gateway is the front end, the security layer.
And the processor is the core financial engine that actually moves the money.
And that's our mission for this deep dive. We're going beyond just simple definitions. Our sources give us this phenomenal global lens, showing how this gateway processor relationship, it flexes and mutates across different environments. We're talking India, China, Africa.
Yeah, it's not a static relationship at all, which is what makes it so fascinating. So let's maybe establish the U.S. model first. It's a good baseline.
Sounds good. So the core question is, if I'm a merchant and I use a tool like Stripe or PayPal, am I using a gateway or a processor?
Well, based on the classic U.S. definition, companies like Stripe, Authorize.net, Braintree, they are primarily categorized as payment gateways.
Even if they offered the full stack?
Even then, their core function, their starting point, is the gateway.
Okay, so what does that mean they're actually doing at the moment of a transaction?
They're the customer-facing entry point. They provide that secure digital interface, the little box where you type in your card number.
Right.
Their primary job is to capture that sensitive data, securely encrypt it, and manage the user authentication. So in short, the gateway manages front-end risk.
Fraud prevention, data breaches, making sure the interface is smooth.
Exactly. So the gateway is this highly secure, encrypted pipeline, just handles the data. But once that data leaves the merchant's website, that's when the processor takes over.
For the heavy financial lifting.
Precisely. The processor handles the communication with the wider financial world. In the U.S., you're thinking of giants like First Data or Global Payments or Chase.
Okay.
They talk directly to the card networks, Visa, Mastercard, and the issuing banks to authorize the transactions.
Yeah.
And then later to actually move the funds, they manage the financial risk.
So liquidity, compliance, settlement timing, all that critical stuff.
All that.
Let's walk through the technical flow step by step. I think this is critical because it highlights exactly where one role ends and the other begins.
Absolutely. It's like a 5-step choreography. So one,
Yeah.
you, the customer, enter your payment info online. That is received by the gateway.
Just a couple lines.
Step 2, the gateway encrypts that data, turns it into unreadable code, and securely sends it to the processor.
Okay.
3, the processor takes that encrypted data, talks to the card network, which then contacts your bank to check 2 things.
Is the card valid and do I have the money?
That's it. And that check is called authorization. Think of it as a temporary promise that the funds are there.
And that response, the approval or the decline, it doesn't just go straight to the merchant, right? It goes back through the system.
No, it has to go back. The response is immediately sent back to the gateway, which then displays that result to you. That's step 4.
And that all happens in, what, milliseconds?
Milliseconds. Then, if it's approved, we get to the final crucial step, clearing and settlement. This is where the processor really earns its name.
This is the actual money moving.
Yes, it manages the actual transfer of funds from your bank to the merchant's bank, which can take a few days to fully complete.
Okay, the distinction is clear. Gateways, secure data, user interaction, processors, authorization, moving money, compliance.
Exactly. And because they solve different problems, their value propositions are totally distinct.
Right, so we see the gateway focusing on the front end, polish and security. What are the key things a merchant is looking for when they choose a gateway?
It all comes down to boosting conversion and reducing fraud. They provide fraud prevention tools, checkout optimization to stop people from abandoning their carts.
And tokenization, that's huge.
Oh, it's massive. The idea of replacing your actual card number with the useless placeholder token means the merchant never has to store the real sensitive details. It just slashes their security liability.
So if the gateway handles security and conversion, the processor must be all about just brute force financial reliability.
That's a great way to put it. A processor's success is measured by high authorization rates. You want to make sure valid transactions aren't declined by mistake.
And low latency, right? Speed.
Speed is critical. Those authorization checks have to happen in less than a second. And when a processor fails, It's a very big deal.
I can imagine.
They're responsible for settlement reliability. If that process is erratic, the merchant doesn't get paid on time, and that wrecks their cash flow. They also manage what's called multi-rail routing.
So if one network is down or too expensive.
It instantly routes the transaction through the next best path. Their whole world is just the secure, efficient movement of money.
Okay, so we've nailed the US baseline where, these two services are often sold as a single package. But that's the easy part. Our sources show that the moment you cross a border, this clean distinction just breaks down.
It completely breaks down. This is where the deep dive really begins. And I think India is the perfect example of where a gateway has to evolve into this critical smart orchestration layer.
Because their payment landscape is so fragmented.
Incredibly fragmented. You have cards, digital wallets, net banking, and of course the massively successful UPI system.
UPI, the Unified Payments Interface. For anyone unfamiliar, that's the National Real-Time Payment Network.
It is. So India's gateways, think Razorpay or PayU, they don't just handle card data. They have to integrate all these different rails. They handle the encryption, the tokenization, QR code interactions.
So the gateway becomes a kind of air traffic controller for payments?
That's a perfect analogy. The merchant just plugs into the one gateway, and the gateway figures out the best route card, UPI, whatever, to get the highest success rate.
But who's the processor in that UPI transaction?
And that's the crucial detail. For UPI, the actual authorization and settlement that's performed by the banks and the MPCI, the government body itself.
I see.
The gateway provides the interface and the risk checks, but the government system handles the core financial plumbing in real time.
That is just mind-bogglingly complex. And then you compare that to China with platforms like Alipay and WeChat Pay.
Where the distinction basically melts away. The platform ecosystem controls everything. Alipay acts as the gateway. It provides the user interface, the QR code, the authentication.
It also acts as the processor.
Exactly. It handles the authorization, clearing, and settlement all inside its own closed-loop ecosystem. They're the front door, the security system, and the vault, all in one.
Let's pivot to the UK and Europe. We have more traditional players there, but the regulatory environment, especially open banking, is a new variable.
Yeah, what's fascinating there is how UK gateways like WorldPay or Mali are adapting to support account-to-account payments using open banking.
Which lets customers pay directly from their bank accounts.
And completely bypass Visa and Mastercard.
That's revolutionary. How does the processor role change then?
Well, the gateway still initiates the payment and authenticates you. But the processor's job shifts. It's now focused on managing the settlement and confirmation across the national banking systems, not the card networks.
It's a different set of rails.
A completely different set of rails.
And what about markets like Africa or Latin America, where the infrastructure might demand an even lighter touch?
In Africa, mobile money is dominant. So firms like Flutterwave and Paystack act as both gateways and, you could say, light processors. They have to connect mobile wallet APIs and traditional bank transfers. It's essential for financial inclusion.
Right, so a merchant can accept money from a bank account or a mobile wallet in a remote village.
Precisely. And in Latin America, with so much cross-border e-commerce, it's all about localized approval rates. A global gateway trying to process a transaction in Brazil needs to use a local processor. They have to integrate with local methods like Pix or Boleto.
Why is that?
Because the domestic processors have better relationships and higher trust with the local banks. Using them dramatically improves the chance of the transaction being approved.
So the global gateway secures the transaction, but the local processor gets it approved.
You've got it. And then you have a place like Singapore, which is this regulatory hub.
A financial hub, yeah.
Their gateways, like Edion, are managing really complex multi-currency routing, while the processors manage settlement over local paths like Fast or PayNow. The governance there ensures incredibly high cybersecurity for both.
This whole global tour shows a clear pattern. The functions secure data capture versus financial movement, they remain, but the reality forces this massive convergence.
It does. The gateway becomes a far more intelligent orchestration tool than the simple US baseline would suggest.
So that's the key takeaway. Now let's look ahead. If the distinction is already blurring, future technology is only going to accelerate that.
Oh, absolutely.
Let's start with the gateways, the front-end specialists. How will they change?
I think gateways are going to focus heavily on even more advanced authentication. We're talking biometric authentication, device fingerprinting, much deeper integration of tokenized credentials, anything to reduce checkout friction while boosting security.
They'll always own that seamless, secure interaction point.
Right.
And the processors, the engine room, they'll be using new tools to make money movement smarter.
Exactly. Processors will enhance their decisioning engines with AI-driven routing, meaning the system will instantly check network load, fees, failure rates, and pick the absolute cheapest, fastest path for every single transaction in real time.
Which is huge for cross-border commerce.
It's a game changer. It'll drive demand for things like dynamic FX management and instant settlement.
And then there's embedded finance, the idea that every company becomes a finance company. That has to change the game again.
It will. Embedded finance means gateways and processors are moving deeper into non-financial platforms. Think accounting software or social media platforms.
Yeah.
They'll enable those businesses to offer financing or direct payments flexibly, often dissolving the operational boundaries we've been talking about. The payment moves away from the checkout page and just becomes part of the workflow.
So to synthesize this for you, gateways are your secure, smart interface. They handle data encryption, fraud, and the user experience.
While processors are the financial engine responsible for authorization, clearing, and settlement.
But the moment you look internationally at UPI, Alipay, open banking, mobile money, those roles adapt, they flex, they often merge, and the gateway becomes this powerful orchestration layer that the local rails demand.
Which leaves a really important question for you to consider. I mean, given this huge shift toward real-time payment networks like Pix and UPI and these unified platforms like Alipay.
And now you layer embedded finance and AI on top of all of it. Exactly. So what's the end game here? Over the next 5 years, are we going to see these two roles, gateway and processor, just completely merge into a single entity everywhere?
Or will there always be a need for that specialized financial plumbing? You know, the separate regulated engine room, no matter how smart the front end gets. Will those two crucial functions need to stay separate?
It's a fundamental question about the future of financial infrastructure.
It is. And it's certainly something to mull over the next time you tap your card or scan a QR code. We've just scratched the surface today, and we encourage you to explore the evolution of these intelligent, rapidly adapting systems further.